Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 6, 2020, and it's 9:38 a.m. in London when we're doing this market update. We're going to take a look at the markets. We have some good news coming out from regards to the coronavirus. Things are definitely going in the right direction. And stock markets are taking that into account to going upwards. Even cryptocurrencies are going up a bit on the increased risk appetite as we're starting to see the end of the fast spread we have seen across Europe, but also even the US. Of course, there's a lot to remains to be seen about the economic impacts. We had the non-farm payrolls being really soft on Friday, but the market didn't care about that. And I think it's quite straightforward, as I've been saying over the last few weeks. All the economic data we're seeing now is damaged because it's backwards looking. It has to do with actions that the governments took because of the virus a few weeks ago, and it's all man-made. Again, as I said it before, governments told people to stay home. That's why things are dropping so sharply. And the stock markets, as you might remember, dropped very, very sharply heading into this, and people couldn't really explain it, but now we know the data has been really, really bad, and we're definitely in some sort of recession. But if the situation in China is to be followed, then we're gonna bounce back. It's not gonna be as great as before, but we definitely shouldn't probably be trading at the current low levels. So we're gonna talk about that. Now, if you're totally into this presentation, we're gonna take a look at euro dollar, pound dollar, dollar yen, gold, crude oil, DAX, and the S&P 500. If you do have any questions, you can just put them here in the chat box over here in this little section here, and I will do my best to try to help you guys. Good. So let's begin then. I just need to do something here. Here we go. Okay, good. So guys, let's begin, and let's talk a bit about the data. And as you know, I keep track of all the major countries, and we can just quickly add the data. Look here. You have the Italian data for Sunday, which was 3.5. The Italian data for Sunday was 4%. They locked down on the 9th of April, on March, sorry. Before that, they had average growth rates of about 26%. Over the last few days, they have average growth rates of 4%. Very, very low number. And also, the total number of new cases has moderated a bit. It's not like 6,000 we just saw on March 28 or 6,153 so we saw on March 26. So things are going in the right direction. Even France here, so France had a super low level, even lower than Italy. And it might be a one-off because they have a high volatility in their data. But what's quite interesting is that both Saturday and Sunday saw their numbers go down to single digits again, and average has been about 6%. They had this huge increase of 39% on April 2nd, and the reason for that is that they measure people that are in hospital primarily, but they added data for people like in elderly homes and so on and so on. They had the infections, and also people that had died. In the United Kingdom, we're struggling a bit, 14%. But if you look at this, so France had a head start of about 7 days, and the UK lockdown on the 23rd. So maybe 7 days from now will be also lower. So let me see here. So this was 14 days. So 14 days. Where were so? Okay. So at 11%, that's where France was. 14. After 14 days of lockdown. Is this 14 days? Is correct? Yes, it is. It's 2 weeks of lockdown, and then they were about 11%. So it's not like a huge difference. So hopefully things will improve in the UK fast. Here's the US. US has very good numbers. 8% on Sunday. If we take the last 3 days into account, you're looking at 11% growth rate, which again is low. They locked down pretty much the same as the UK. But as I mentioned before, I think what's happening here, which is quite interesting with the US, is that because in Western Europe, you have access to, in Europe in most places, you have access to healthcare, and it's free. You pay higher taxes, but you get free healthcare. I think people are a bit relaxed, especially if they're young as well. They're like, oh, I'm young, I'm fit, I don't have diabetes, I don't have like, I'm not overweight and things like that. I'm quite fit. I'm going to be okay. And even if it does go really bad, I'm just going to go to the NHS and they're going to hook me up to one of their machines. It's going to be good. I think places like the US, where you need to have private healthcare, and if you don't, you need to pay a lot of money to get help. I think people are far more cautious than over here. And I think that definitely helps a lot. And if we continue here, if you look at the numbers from Spain, the numbers are really good as well here. They're just down at 4%. Which is a solid little number here. They've been locked down for quite a significant amount of time. They've been locked down with about 23 days. So US is quickly gaining on them. And I don't think they're going to go down to 4% in the US anytime soon. But you can see here, like in Spain and in Italy, things are going in the right direction. It's just taking a bit longer. On the other hand, I don't know if there's any truth to it, but I think with the way family is very different, like it's very important, like you live with your grandmother or they live very close by, so much more closer community many times in places like Italy and Spain. I think that could potentially influence things potentially. I'm not sure exactly, but things are going good. And so what I done here is quite straightforward. I took like an index, like an average of everything. So that's Spain, Italy, Germany, France, UK, and the US, because that's really what the stock market is looking at. And on March 19th, we had a growth rate of 35%. That's when the market bottomed out. Now we're at a growth rate of 6% on average across all these countries. So terrific work, everyone. And the markets, of course, have gone upwards on this. And the reason why I talk so much about this is because look at the patterns in 2003. Look at the pattern of the situation here with what happened in China. It follows the same pattern. So that's why I've been bullish. And that's why we've been rewarded so far. It was definitely a difficult thing on Friday, but remember we said look to buy down here, because I adjusted this to the upside. So I said buy down here, push this to the upside. Now here's a good opportunity to book profits, 50 or 100%, probably even 75%. And then it might come down again and we can probably buy down here. Now what I don't know is the second-hand effects here. What happens when you have this 700,000 people that lost jobs? And by the way, this is the scary stuff with the NFP. The cutoff point was just before the shutdowns. So that's why the initial jobless claims probably paints a better picture. So yes, I think on the 23rd, so the NFP, sorry, I'm messing things up here now. The NFP on the 23rd, it measures what happens before the 23rd. Well, California closed here. I can't see the dates now. Let's see here. California closed on the 19th. New York closed on the 22nd. So as you probably guessed, the non-farm payroll is going to be horrible. But again, it's man-made. Governments told you to stay home. So when governments tell you to go back to work, things could change. For example, in Denmark now, they're looking to allow people to go back. They're exploring things on how people can go back to work. So for now, I'm going to remain bullish. And I'll remain bullish as long as you're about 2,427. It's very straightforward. The idea has been to buy here over the last week. So far, it's worked out fine, with the exception that we got stopped out here. Stop losses was way too tight last week, but then we had this little pullback, and that worked out fine. Of course, if we take this out, we can probably go a bit lower. And I'm going to show you some other stuff as well. Actually, I shouldn't show you because it's you need to subscribe to it. But the Financial Times, they have done analysis on the Chinese stock market. So the Chinese stock market in the beginning of the year, they gave that an index of 100. On April 2nd, so the data is already a few days old, the Chinese economy stood at 62, where typically it would be at 80. So effectively, it recuperated, or it's just down with those 40 percentage points from its high. I know this is not the same thing, but just to give you a bit of some sort of comparison, effectively, the economy was here. The economy went all the way down here. Actually, it went down quite significantly. is now at the 60 point, and that's sort of where I think we can go. I think stock market can go up to the 61.8% correction level, and then from here it's probably going to be a bit messy. It might take 6 months. The last part is always a difficult part. It could take up to 2 years, because traditionally when you drop this much, it takes 2 years to recuperate the high. So then we can go up to 61.8% correction level, and then from here we'll see what happens. But then it might go down, might go up, but it's probably going to be a messy story. For now, it's very straightforward. It's relatively clean pattern, which is bullish about 2,427. If we take this out, we'll probably go a bit lower. Now, if you think, Alex, I like your analysis, but I don't agree with you here. Okay, so if that's what you think, then this is the level in the short term. So people are probably selling here, stop losses go on the other side, and then they attack the downside. But then obviously what you want to see is it go much further. If not, what happens is you just go down here, book profits, and wait for the break to the downside. Case of the German DAX is also looking really good here. We talked about buying here, and that worked. We got like a perfect entry here, perfect move to the upside. It's a good opportunity to book at least 70%, if not 100%. And we're stuck in this little rectangle now. I think this is the original buy level at 9,466. We can get rid of that now, and I think if we do go down to 95.84, I think people are going to be buying, and stop loss is going to go here. Because this is a bit of a rectangle, take this out, this is also bullish. If you take this out, we can probably go lower. So let's take a look at the currencies now. So the currencies are going down, so the dollar is gaining, and I think what's happening here is that the currency traders are looking at things a bit differently than stock market traders, and they're also focusing on the huge outflows you're having from emerging markets. So for example, this is the dollar Turkish lira, which is just gaining and gaining and gaining. And what's happening here, as I said many times before, is that you have banks and institutions in these emerging markets, they borrow in dollars, they borrow in euros, and because their economy is collapsing, like everybody else right now, they need to hedge their positions in a huge amount of money, and everything is going to the dollars. You got Turkish lira going up sharply, and things like Mexican peso going up with some 37%. Let's see if I can load it. And I think that's really what's driving the dollar. Like this is dollar Mexican peso, which has gained with some 35% from just a few days, actually from February 18th. So I think that is influencing things. So for the euro right now, I'm going to continue to be bearish. This is the same levels we talked about last week. I think we can tighten this up a bit. So we're going to lower it a bit to 108.77. And I think we can go down to maybe 107.39. But it's a bit difficult here. I think we're starting to reach like old levels, and we'll see what happens. But we can be bearish for now, just from this level that we talked about. We're up now a little bit anyway. Here's GBP versus the USD. So this is going upwards, okay? And this is despite Prime Minister Boris Johnson being taken to hospital, apparently for some tests. Some people say it's code for he's going under a ventilator. I hope he will have a speedy recovery. But I do find it a bit surprising that the currency is going up on the Prime Minister going to hospital. So he's probably not going to be able to work for at least 2 weeks or so. 1 week, say 1 week, 2 weeks until he comes back fully recovered. We'll see what happens. Hopefully they will do a video or more information so people don't have to speculate. Long story short, the idea here a few days ago was to buy, but it was at a lower level. It was to buy at 121.80 or something like that, somewhere here. We missed that entry. Now we can tighten this up now. So I'm gonna be bullish above 21.13. So if we revisit, one could potentially get involved here. And actually gonna push this down a little bit like that. But if this spends longer time here, if it goes down and then up, this is gonna develop into a horizontal pattern where I can probably tighten things up quite dramatically at one point, but it's probably gonna be something like this, where you have a break to the downside, probably doing something like that, and the alternative is turn bullish. But given the way the euro dollar is going down, I think maybe it will be a bearish move rather than a bullish move. So that's the GBP. There's the dollar yen. So the dollar yen, if we said a few days ago, you said look to sell here for it to come down. And then when it move up again, I said look to sell here for it to come down. But it never did come down. And now we're trading on the wrong side here. So we're trading above this level here. So the trend is now short and bullish. We might squeeze ourselves up to 110.09. And you know, the very short term trend, I guess it will be bullish about 107.66. But I wouldn't get too excited here. I don't think it's the time to be very excited in this market. This is crude oil. So the crude oil moved up sharply. You know, I think everybody sort of had a sense that it should be trading at $20 per barrel. And there's talks, again, it's a big difference because we're getting the US involved here as well. And if that goes ahead, you know, we should probably trade a bit higher, 37, if not $40 per barrel, if they go ahead and do things. But all these negotiations is messy, and you know, we're up a bit. You know, they didn't have a deal, but for them, crude oil producers, they can just sell their product now at 40% more than before. Still big decline in what we saw in the beginning of the year, but yeah, so good here, even if they don't even have a deal. The idea a few days ago was look to buy a dip, I think, but we never really went low enough. I have pushed up the buy area a little bit here. So maybe from 25.46 or so. I think we can definitely go lower. I'm not sure we're going to go down. But 26 or so, I think actually let's push this up a bit like that to 26. And then we'll see what happens. I'm going to be bullish about 23.32. And I think we can probably go down and then probably up. Maybe we'll be trading here at one point. It's a bit difficult with these negotiations because you have a headline, things rally. You don't have a headline, the whole thing collapses. So it's a difficult situation. Gold prices. Okay, so these are gold prices. The gold price took out its highs. Took out this level here, which was my trend finding level. It's a bit weird. You have gold going upwards the same time as you know, the dollar is strengthening a bit against the euro and stock market's going up. But we are in a world where a lot of the traditional correlations are just out the window. What can I say? If we take out 1642, we can probably go a little bit higher, maybe 1666, and then maybe up to 1689, and then maybe all the way up here. So all these different highs, and you have some support down here at 1601, and then you have support at 1566. If we take this out, we go up a bit, and then maybe we go down, we can buy the dip. Otherwise, I would ignore this for now. And that's gold. So we'll cover all the main markets. Now, something quite interesting, actually. So there's been some stuff on online, on Twitter. They're like, yeah, wait until we have 1 million cases. But this is quite interesting. So the death rate in the Princess Diamond, I don't think I'm going to find it now. The Princess Diamond was a boat where people were 2 weeks on holiday and they were confirmed, and then they were contained for another 2 weeks. So we're in total 4 weeks on that boat. The benefit of the Diamond Princess is that they tested everyone. They did less than 3,500 tests or so. And that covers all the different cases. Because in many times we don't know, you know, maybe there's 733 people in, I mean, there are 733 confirmed cases in Hungary, but there's probably a number here where there's a ton of people that do not have any symptoms. They're not sick, but they have the virus. They're just home isolating now. So it looks like they don't have anything, but they probably do. So this is quite interesting. So 11 over 712, that gives you a death rate of 1.5%. So that's probably where the actual death rate is. So because we have total deaths, and in the US, for example, or let's take Spain, you got 12,641. And then we divide this by the death rate, which is, anyway, it's a bit higher in some of these countries because elderly populations. Then you're looking at Spain probably has 842 people confirmed with the virus already. That's quite interesting. Okay, it's 10 o'clock, so I actually have to leave you guys, but I'm going to see if there's any quick questions. Otherwise, we're going to leave. Antonio and Marvin, good morning to you guys. Antonio says, Spain hoping worse is over because of lower numbers, but looks to me that yesterday's data is very misleading. Unfortunately, expects to worsen. Any thoughts? Yes, so I think what we can do for the situation, I mean, it depends. You need to look at I mean, it depends. People definitely going to continue to die. There's no doubt about that. But what I'm looking at in places like Spain is what's going to happen afterwards. Because if there is a death rate, like the total death rate in people total confirmed here in Spain is 131,646. Take that 1.5. Let's make it 2%. Actually, if you just look at the gross data of people in here, in this, then the death rate is like 20% or something, 21%. So these are people that are so sick that they end up in hospital, because this is really what we're looking at. This is people ending up in hospital. It's not you and me or anybody else that could be sitting home. I have no symptoms. I can still smell things, but maybe I had it, maybe I didn't. So from that perspective, yeah, you're probably going to see far more deaths here. So from that point of data, if we look at that way, so you're going to have 27,000 deaths. You only have 12,000 here. So you still have about 2.18 times more people that are going to die in Spain. So from that perspective, humanitarian perspective, it's going to turn worse. I definitely think so, because the deaths is a lagged effect of this. Okay. And that's what we are, and this is gonna worsen. But if we look forward, then the situation is looking much brighter than it has done before. And if we do look at this data from Spain, yesterday was 6.6, or yesterday was 6% and 6%, 8%, 9%. So things are on average 7%. So definitely a bit misleading here, maybe. But what we want to see for Monday is this number maybe going to 5%, maybe 6%, and then hopefully settles down. Okay, guys, you probably heard that, right? It's me, and it's time for me to leave you guys. Don't forget to follow me on Twitter. If you have any questions, you can follow me at AlexFX00 on Twitter. And I hope to see you guys hopefully tomorrow, same time here, for the next market update. Have a great day, guys, and thank you so much for watching. Cheers.